Welcome to Value Investing University. My name is Mariusz Konieczny, and in this video I will be talking to you about performing due diligence on a stock that you either found yourself or read about it on an investment blog or possibly an investment sharing website or some other source. I like to divide my due diligence into three parts: quick due diligence, medium due diligence, and full due diligence. Quick due diligence is something that it should only take you about 10 minutes, and it is intended for you to quickly find out some basic facts to see if you're interested and if you want to move on to medium due diligence, which is more detailed and should take you about 1 hour. If you still like the stock after the first two steps, then you can move on to the final step, which is a full due diligence. And in this step, you really study the company in detail. It usually takes me anywhere between 3 to 7 days to complete the full due diligence process. And depending on how many hours per day you dedicate to investing, it might take you longer than that. After you complete all of these three steps, then you can decide whether you want to purchase a particular stock or not. So to show you how I divide my due diligence process, let's go ahead and get started. After you learn about a stock, first you should perform a quick analysis to see if you are even remotely interested in the company, because you don't want to waste hours and hours on a particular company just to find out that it operates in an industry that you don't even want to be in, or that it has too much debt and you don't really invest in companies that owe too much money. By quickly eliminating the companies that do not appeal to you, you can spend your time on companies that do interest you. And the goal of the quick due diligence process is to answer the following questions. What kind of business is the company in? Is the company profitable? Does it have any debt? What does its stock chart look like over the last 5 or 10 years? Are any of the insiders buying stock right now? Have any 13Ds or 13Gs been recently filed? Are there any recent press releases that stand out? Does the stock look cheap? So let's take a look at how to answer some of these questions. To find out what kind of business the company operates in, go to Google Finance and type in the company's ticker symbol. Let's go to Google Finance. Type in the company's ticker symbol. In this case, let's try ACAT, which stands for ArcticCat, and scroll down to the company's description. And in this case, ArcticCat designs, engineers, manufactures, and markets snowmobiles and all-terrain vehicles, ATVs, under the ArcticCat brand name. Then on the right, you have website links, and usually you will have the address to the company's website. So let's go ahead and click on arcticcat.com, and it takes you to the company's website. Take a few minutes to just look around the site just to get an idea of what the company does. Here we have various models of snowmobiles and various models of ATVs. You want to find out what type of business the company is involved in, because it gives you an idea of what kind of stock you're dealing with. You might not necessarily understand the business yet, but this is not important. What is important is that the learning process starts with gaining incremental knowledge with each step you take. To quickly find out whether the company is profitable, I like to go directly to Edgar and look at the most recent 10K and go directly to the income statement. So when you're in Google, type in Edgar, which is a website run by the Securities and Exchange Commission. Search for company filings, a company name, and type in a ticker symbol. Since we already looked at ArcticCat, let's use it as our example, ACAT for a ticker symbol. And you can see here we are at ArcticCat filings, and let's click on 10K. And let's go to the table of contents and pick item number 8, financial statements and supplemental data. This takes us directly into the company's financial statements. Here we have a balance sheet, and here we have the company's income statement. And looking at the bottom for net earnings, we can see that over the last 3 years, from 2010 all the way to 2012, yes, the company has made money. Therefore, it is currently profitable. And you are finding out whether the company is profitable, not because you should only invest in profitable companies, but because it will give you an idea of what you're dealing with. Unprofitable companies can only stay unprofitable for so long. Something has to happen for them to survive. They either have to liquidate, meaning that they do not survive, or they have to sell to a different company, or they have to raise more money. At this point, you don't really need to know these things. All you need to know is whether the company makes money or not. To find out whether the company has any debt, all you have to do is skim through the balance sheet under the liabilities section. And to get to the balance sheet, you get there the same way you get to the company's income statement. And since we already have income statement on the screen for ArcticCat, we can just go back to the company's balance sheet and just take a look whether the company has any debt. So we go to the section of liabilities and shareholders equity, and we're looking for any kind of debt. And in this case, I do not see any debt. And yes, the company does have liabilities. All of the companies have liabilities. And in this case, we have current liabilities. We have accounts payable, accrued expenses, income taxes payable, and then we have deferred income taxes. And then we go straight into the shareholders equity section. But let me show you a different company. So let me go back to the search. And instead of typing ACAT for the ticker symbol, let's type in H&H, which stands for Handy and Herman Limited. And as you can see, we are at the right place, Handy and Herman Limited. And here on the bottom are various filings by the company. And here we can see the company's 10K. So let's click on it. And let's go to the table of contents. And as you can see, here we do not have interactive table of contents, which means we have to scroll down all the way to the financials, which are usually somewhere in the middle. And here we are at the company's balance sheet. And if we go to liabilities and stockholders equity section, you can see we can very easily find long-term debt of 14.6 million, and we have long-term debt to related party of 20 million, and then we have accrued pension liability of 186 million. And also under the current liabilities, we have 24 million of short-term debt, and we have a current portion of long-term debt of 4.4 million. I personally do not like to invest in companies that have a lot of debt, so I can quickly eliminate them in this step. But there is no rule on how much debt is too much. Obviously, I like zero debt or very little debt, but debt is usually in relation to something else. So
one of the quickest way is to look at total debt in relation to shareholders' equity. So in this case, to find shareholders' equity, we go all the way to the bottom, and in this case, we have shareholders' equity of 58.9 million or 59 million of shareholders' equity, and we already counted much more in liabilities in relation to shareholders' equity, and probably in this case I would not be interested in this company because it's just too risky, too much debt in relation to equity, and I would probably skip. But that doesn't mean it's not a good investment. It's just my personal preference that I don't like to invest in companies that are swimming in debt. I like looking at the chart just to see how the stock has been trading. I'm not doing it to perform any technical analysis because I don't believe in it, but a chart paints a certain picture. For example, if I look at a chart showing a Bridgepoint Education stock price with the ticker symbol BPI, and I go back 6 months, I can see a big drop in July, as you can see here. I know that something bad had to have happened for the stock price to drop so quickly from $22 per share to as low as 9.77, and then dropping even lower, below $9 in such a short period of time. Was it a negative earnings report or something else? I don't know, and I don't care right now, but I want to keep it in mind so that I can look into it later. If we look at the stock chart of ACAT, Arcticat, that we previously looked at, and if I go back, let's say 5 years, you can see that the stock was trading at $18 per share, and then it dropped very low to $3 per share in 2009, and now it's trading, as you can see, at $40 per share. By the way, I bought it sometime in 2009 for $4 per share, so as you can see, it has been a 10 bagger for me since then. I didn't hold it all the way through, but I made some decent money on it. But in 2009, it was trading at $3 or $4 per share, and since then it had such a huge run. And now the question is, if we're interested in this stock, does it still have some room left to appreciate from here, or is it priced correctly? For such a huge improvement to take place over the last 3 years, the company's operations must have improved quite a bit for it to appreciate so much, and I wonder if there is still more room for appreciation. And at this point, I don't really care. I'll find out later. But by looking at the chart, I kind of have an idea of what has been happening over the last however many years I choose to look at the chart for. To check whether insiders are buying the company's stock, go to www.secform4.com. And here you are taken to a website where when you type in the company's ticker symbol in this box here, the site will generate insider transactions from Form 4, which is used by insiders to report their buy and sell transactions. So let's give it a shot. And in this case, let's type in ZIPR, which stands for Zip Realty. And here we have a list of various buy and sell transactions reported by various individuals. Here you can see the individuals that are buying, how many shares they are buying, at what price, the dollar value of the transaction, and how many shares they own after this transaction took place. One thing that I want to point out here is that you can see between August 10th and August 13th, Charles Baker, the company's CEO and president, bought 46,000 shares at an average price of $1.65 per share. And just a month later, someone else had to pay $2.43 per share, which is significantly higher from the level that the CEO was buying. So this is the power of following insiders, because they are inside the company, they know what's going on, and every time they're buying, there is usually a reason for why they're doing so, and the reason is usually that they believe the stock is cheap. But one thing that I would like to point out is that while I like to see insiders buy because it tells me that they think the stock is cheap, however, if I see insiders sell, it does not mean that the stock is overvalued. For example, if we go back to a different company and type in MIND, which stands for Mitcham Industries, here we see mostly insider sales. And if you just look at the sales and assume, well, because insiders are selling, I'm not interested. Well, just because insiders are selling, this doesn't mean anything. Look here, this person, Paul Guy Rogers, sold the company's stock for $7.40 at the end of 2010. And recently, the stock was trading as high as $27. So if you just followed the insider and looked at his sales and skipped this company because some insiders were selling, well, you would have missed out on a huge opportunity to more than double your money. And if you look through the list of various sales here, these insiders were always selling. They're selling at all kinds of prices. Here we have $15, then we have again $9, the same person sold, then we have $20, $24. In this case, it really doesn't mean anything that these insiders are selling. In most cases, insiders sell for many different reasons. For example, some of the reasons might be they want to buy a house or fund a child's college education. So just because they're selling, it doesn't necessarily mean you should rule out investment in the company, but you want to know about it. To find out whether any 13Ds and 13Gs have been filed, go to Edgar and search for the company's filings and type in the company's ticker symbol. So since we are already here on this page, let's type in a ticker symbol of FLOW for Flow International Corporation and look through the company's filings to see if there are any 13Ds and 13Gs. And in this case, we can see one here, see another one, a 13G here, and then we see some more below. And if we scroll down, we see another one here and more of 13Gs here. So if there are any of these kinds of filings, it means that there are other buyers who are buying the company's stock. And once these buyers own 5% or more of a particular company, they are required by law to file either 13D or 13G to report these buys. If they are buying, there must be a good reason for it. They probably think that the stock is undervalued, and this is good news for you, because if you're interested in buying undervalued stocks, you have other people that think the same way. They might see exactly what you're seeing in the particular company. I usually like to skim through various press releases. I do it because I can quickly find out certain information. For example, remember how we previously looked at Bridgepoint Education? And when we looked through the chart over the last 6 months, we saw a big drop in the stock price in July. So if we just look to the right in Google, we can quickly skim through various press releases, and here we have something about a law firm notifying investors with losses on investment. Then we see something else about a Bridgepoint being involved in some kind of lawsuit. And notice that here we have another one, something about a class action lawsuit that has been filed. And notice that all of these are around July, and it might probably have something to do with the sharp drop in the stock price, because anytime you see a lawsuit, it tells me that someone is unhappy about something and is suing the company for whatever reason. But looking at these press releases here, it just gives you certain press releases, and not all of them are reported by the company. Here we have something reported by businessjournal.com. Then here we have Capital Blog. All kinds of information finds its way here. And to look at the company's press releases, then we usually have to go to the company's website. And as we previously went to Arctic Hat's website by following the website links, we can click on Bridgepoint Education website and look for investor relations section. So here we have it here, and look for news releases. And if we're just skimming through various of these releases, here we can see they reported the second quarter. Here we have something about some kind of notification from the HLC, and then we have something about appealing the application for accreditation. It is all taking place in July, and this is exactly when the stock price dropped significantly. Could the drop in the stock price be related to the accreditation issues? I don't know, possibly. We'll find out later. But by looking at these press releases, you can quickly get an idea of what could be taking place without investing a significant amount of time and then finding out at the end exactly what it is that's going on inside the company. To find out whether the stock appears to be cheap, one thing you can do is look at the chart. And if we're discussing Bridgepoint Education, we know that the stock before was trading very close to $30 per share, and now it's at 11. So if whatever made the stock drop from $20 to $9, if these issues can be resolved, then we have some opportunity. The stock could go back to where it used to trade before, and there is a possibility that the stock is cheap. We can also look at the PE ratio, and in this case the PE ratio is 4.3, which is by any standard cheap, but PE ratio alone doesn't tell you anything. All it tells you is that the company made a decent amount of money in the past, and in relation to what it's trading for today, it looks cheap. But if earnings are in a free fall, it might not be cheap. This is why you're studying the company to figure that out. But you can also go back to Edgar and search for the company's income statement. Let's go to 10K first. Here we have the company's income statement from 2009 and 2011, and as you can see, the company made 74 cents per share in 2009, then it made $2.14 in 2010, and in 2011 it made $3 per share, and the stock is trading for $11 per share. It most definitely looks cheap, but now will the company continue making $3 per share? If it does, the stock is a no-brainer, but we have to find out if it will or not, or if there's other problems that will make the company make less money in the future. Also, another thing that we can quickly look at is the company's balance sheet. We know from Google that the company's market cap is 595 million. So keep that in mind. Let's just say 600 million, and go back to the balance sheet. Number one, we should already know whether the company has any debt, and in this case, the company does not have any debt. But if we look through, we look here at cash, the company has 134 million in cash. Then it has 154 million in investments, and we go down to long-term investments. It has 120 million in long-term investments. So if we add up 134 million of cash plus 154 million in investments, short-term investments, and 119 million of long-term investments, we come out to 407 million. 407 million in comparison to the market cap of 600 million. Significant portion of the company's value is in cash and investments. And if we pull out the cash of 407 million from the 600 million of market cap, so the way to do this is we go 600 million minus 407, it leaves us with 193 million. It tells you that the market is currently valuing the company at 193 million. And if we take this 103 million and divided it by the number of shares, in this case we have 57 million shares, we get $3.39 per share. That's what the market says this company is worth. But we know that in 2011 the company made $3 per share. So what this tells you is that the market is valuing this company at 1 times earnings, which could be a total no-brainer. But at this point, we don't know if this undervaluation is too good to be true. That at this point, all we know is that this company appears to be extremely cheap, but we have to do more work to validate that. Right now, you're not really trying to value it. All you're trying to do is just to get an idea of whether there's possibility of undervaluation.
Quick due diligence is intended to quickly look at the company and decide whether you are kind of interested. Medium due diligence is just a step further, which takes you deeper into your research, but it still does not take you to a full-blown analysis. This step should take you about an hour or so, and after it, you should have a very good idea of whether you want to study the company in detail or not. So let's take a look.
In the previous step, you learned whether insiders were buying. In this step, you want to go a little deeper and find out who they are, whether they are a director, CEO, or CFO, and how much they recently bought in relation to what they already own. So let's take a look at Zip Realty again, ZIPR, and scroll down to once you see the CEO. And in this case, as we previously discussed, Charles Baker made a buy in August of 2012. And during this time, he bought 46,000 shares. And after this transaction, he owns a total of 175,000 shares. So if we quickly take out a calculator and take 175 and 96 shares minus 46,000 201. So before this transaction, he owned 128,895 shares. And he added on to this amount 46,000 shares. So let's just say 46 divided by 129. It tells you that he increased his ownership position by 36%. That's pretty good in one transaction. So you can definitely view it positively, and in this case it turned out to be very positive because the stock did take off all the way to $2.43 just a month later. One other way that you can check how significant a particular or a group of buys is for a particular person is to check how big is this purchase in relation to what he or she makes in compensation per year. And to do that, we have to go back to Edgar and open up a document called definitive proxy statement, and we can access it here. And scroll down all the way until you see a compensation table. Okay, here it is. And here we can see Charles Baker, the CEO and president. In 2001, he made $326,000 in salary, and that was pretty much his entire compensation for the year. And then if we go back to see his insider transaction, as I said before, he purchased 46,000 shares at $1.65 for the total of $76,000. Now, $76,000 in one transaction, and he only makes $326,000 per year. That's pretty significant for one transaction. Let's go ahead and take 76,000 divided by 326. That's 23% of his yearly income that he dedicated to this one purchase. I don't know about you, but I see it very positively. And again, as it turned out to be, it was a very, very smart decision for him to do that. And like I said before, he probably did it because he saw something was taking place inside the company, which was telling him that the stock was going to go up, and consequently, he put his money behind it. In the previous step, you also learned whether there are any other large investors, such as hedge funds, buying the stock when you checked for any Schedule 13Ds or 13Gs. In a medium due diligence, you want to find out who these buyers are. So take their names and Google them. So if we are, in this example, let's take a look at Zip Realty. We have a Schedule 13G here. So let's click on it. And we can see that the group, a hedge fund or a mutual fund, is called Osmium Partners. So let's just highlight them. And search for them in Google, see what we can find. And the second option, it's probably their website. So here we are, Osmium Partners Strategic Value Investors from California. So this is very good news. The website is not very detailed, but we know they're value investors, which is a good sign. We also have their phone number. So this is how you find out who these guys are. If we go back to Google search, we can probably find some other information about them, but for right now, this is good enough. Also, if we go back to Edgar, you can find out what else this particular hedge fund is buying, and you can do so by clicking here and it takes you to all of their filings with the SEC. And this is a very good tool to find out other companies that they're buying. Let's say we'll click on 13G here. Okay, this involves Zip Realty, so we already looked at it. Let's take a look at something else. This is a totally different company, Red Corp. Why not check it out? See if we already know they're value investors, so it's got to be undervalued. Here we have another company, TRX Inc. And here we have Franklin Covey company. So again, this is just one of the ways that you can use to find investment ideas. Sometimes, but not always, you can find out how concentrated their portfolios are. For example, if a particular hedge fund has more than 100 million of assets under management, they are required to file a Form 13F quarterly. And by accessing this form, you can find out how many positions they have in their portfolio. The base case scenario is when they own just a few names, because this means that it is likely that they have high conviction in each idea that they own, and if they are buying the company that you are researching, this is definitely very good news. In case of Osmium Partners, I don't see any 13F, which means that they probably don't have $100 million of assets under management, and therefore are now required to file this form. In my other video, How to Find Great Stocks, I talked in detail about various investment sharing websites that you can use to find investment ideas. In addition to finding investment ideas, you can use these websites for research purposes. For example, on your screen we have valueinvestorsclub.com, and you can use this website to search whether other people already wrote about the company that you are researching. In your top right corner, you see a search box. So type in BPI for Bridgepoint Education and click search. And here you have two people that previously wrote about this company. So all you have to do is just click on each idea and just read what these people have to say about it and why they like it or why they don't like it, because sometimes they submit ideas recommending that someone should short the stock versus buying it long. Another website that I was discussing in my other video is SumZero, and the same thing, you have a search box and you can type in BPI for Bridgepoint Education and search, and here you have a list of people that previously wrote about the company, and you can view each person's write-up and learn from it and see what it is that they like or dislike about the company. Another website that I mentioned in my other video was Microcap Club, and I doubt that it will have a Bridgepoint because it's a bigger company. But so let's try a different one, Noble Romance, and click search. Here, as you can see, you have an investment write-up by one member of the community making his case for why you should or should not buy this particular stock. Another site that I did not talk about in my other video is seekingalpha.com, and let's take a look at it. This is what the site looks like. It is great. It is a great tool for finding investment articles on particular companies, and many times you will find articles by many different authors writing about the same company. And I like it a lot when someone writes a bullish case and someone else writes a bearish case. This way you find out the good and the bad about a company. So to access various write-ups from different authors, go to Investing Ideas and type in the ticker symbol of the company that you are researching. So let's say BPI, again for Bridgepoint Education. And here, as you can see, you have various different articles written by different authors. Why I bought Bridgepoint Education today, and it was written July 13th. we'd continue to stay away from Bridgepoint. This is great because one guy is talking about why he bought it, and some other guy is talking about why he wants to stay away. Then there's another article about accreditation. I don't know if you remember, but the stock collapsed, and it had something to do with accreditation issues. Here, probably if you click on this article, it will tell you exactly what's going on, and they talk about panic or not to panic. It's again great tool to save you a lot of time. But I want to make one thing clear. Reading reports by others is not a substitute for your own research, because you have no idea how much research the author actually did. You want to use other people's research to gain an understanding of the companies that you are researching, but you have to be aware that writers have many different reasons for why they are writing about various companies. Some write because they want to receive feedback from others. For example, if you go below, all the way in the bottom, you get various different comments by other readers that agree with you or disagree with you, and why. It serves as great feedback. But other writers write because they want to market themselves or their businesses. For example, when someone writes an article about a company on Seeking Alpha, it shows up on the company's news, and this means that many people end up reading it, and this provides great exposure to the author. Consequently, if the article was done solely for the marketing purposes, do you want to trust it 100% and not do your own work? Well, probably not, but you can still learn from it. And here, let me show you just how some of these authors benefit from exposure. So let's say I read this article and I see who this person is, and here I want to find out about the author, and I click on this link. It takes me to the author's website, and I would have never ever found this website had he not written this article. And once I'm on this website, I don't know, maybe he's selling something, or he wants people just to view his blog. Whatever reason, writing articles on Seeking Alpha can get you incredible exposure, and that's why some of them write about various companies. In the previous step, you briefly visited the company's website, but now it's time to go back and take a second look. This time, spend more time on it and just look around. Try to see if you can find information about the company's history, products and services, and the management's bio. So let's take a look at the company, Energold Drilling. And this is the company's main page. So spend a few minutes just to familiarizing yourself with what the company does. Here on the main page, they tell you that they are a global specialty driller. On the bottom, you have some information for investors, some videos, services, and photographs. Here you have about us, and you can read about the company overview, the management, who they are, what their titles are, and how they got to the positions that they have. And after you spend a few minutes looking at their general website and learning more about the company, look for investor relations. And in this case, we find it here. It is, for investors, it is the most important part of the company's website. And here you will find annual reports, conference calls, press releases, and various presentations. Usually when I'm studying the company, I want to see if there is an investor presentation available. And in this case, we would find the corporate presentation here. So let's go ahead and click on it. And in this presentation, what it is the management is making their case for why you should invest in their company. In other words, it is the company's advertisement intended to sell you on the idea of investing in their stock. This is very useful because it shows you the main point of why the management thinks that investing in the company's stock is a good idea. And if we just kind of go through some of the pages, just so you can see what it looks like. Here they talk about their technology, where they operate in the world, who their customers are, and usually you have a short section about the most important financial metrics. So you have the idea. And many times the management uses the same presentation that you're seeing here when they attend to various investment conferences. It is not unusual to find an investor presentation like this one accompanied with a video recording from an investment conference. And watching the presentation is extremely useful and important during your due diligence. So after you take a look at the presentation, you usually want to go to look for financial statements, and if we click here, we are taken to a page where you can see annual reports from 2005 to 2011, and find the most recent annual report and read it from cover to cover. And here we are taken to the annual report, and usually a report like this has a lot of pictures and is very colorful, and it usually starts with the message from the president. And I suggest you read this report from cover to cover and pay attention to the company's description, its products and services, competitiveness, financials, and risk factors. The first time I look at an annual report, I usually read the headings of risk factors and I look for certain types of risks. For example, I don't like to invest in companies that have the majority of their revenues coming from a few customers, because if they lose one of them, it will be devastating. Consequently, I usually eliminate a company once I find out that, let's say, 70% of its revenues come from 2 or 3 customers. You will find some annual reports easier to understand than others, and if you don't understand, don't feel bad, because this is normal. The more you know about particular businesses, the easier it is to read and understand these reports. You do not have to comprehend everything the first time you read a particular report, and if you cannot find annual reports on the company's website like we did here, you can also access them through EDGAR if the company is trading on the US exchange. And you already saw how we got to for you to take a look at 10K, and 10K is very similar to an annual report, but it doesn't have all these pretty pictures and graphs, but it contains pretty much the same information, just not in a pretty format.
After spending maybe a couple of hours performing both quick and medium due diligence, you should have a pretty good idea of whether a particular company can find its place in your investment portfolio. With that being said, it is not the time to buy the stock yet until you perform your final and full due diligence. Unlike other 2 steps, performing a full due diligence is much more intense and time-consuming. I would say that if you work on it every day for several hours, it should take you about a week. If you are unwilling to put this much work into studying companies, then maybe you should think twice about whether you should be managing your own money. And I want you to think of full due diligence it this way. If you were to open a business, whether it be a restaurant, hair salon, or some kind of manufacturing company, and you did not have any experience in the particular business, what would be the first thing that you would do? Well, if you're smart, you would probably need to learn about the business that you want to enter. And this would require reading books, magazines, internet articles, and maybe talking to people in the industry. And this might seem obvious to you, right? Well, this kind of logic does not translate much into stock market investing, because most of the stock market investors have absolutely no idea about what they own in their portfolios. And whether you start a business or buy into an existing business through stock market, you should take the time and study the company, study the industry, the same way you would as if you would be opening a business. So without any further delay, let's go ahead and get started.
By now, you should know what the company does and what industry it is in. If you already studied the industry before, you can obviously skip this part, but if you did not, then this is the time you need to learn about it. I usually like to start with Amazon to search for various books on the industry. For example, when I first looked at International Speedway Corporation, which is a promoter of NASCAR events, I didn't know anything about the business of racing. I knew that people go to races to watch cars drive around in circles, but that was about it. So before I invested in the company, I had to learn about NASCAR as a business. So I went to Amazon to see what kind of books were available on this topic, and when you type in business NASCAR to Amazon search, you will find various different results. But if we click on the first, the 200 miles per hour billboard, the inside story of how big money changed NASCAR, it's definitely something that I would want to read. And once you obviously find a book, you can look at other things that are suggested. And when I was researching the business of NASCAR, I read this book, but I also read several other books. I read The NASCAR Way, The Business That Drives the Sport. What else did I read here? I read One Helluva Ride, How NASCAR Swept the Nation. And then there's another book that it's not here, but I found it some other way, and the title is Growing Up NASCAR, which is a book written by Humpy Wheeler, who was one of the best promoters of NASCAR events. And I read all of these books because they allowed me to gain a very deep understanding of the industry and the companies operating in this industry. I knew why the sport became so popular, why TV stations and advertisers paid so much money to be associated with the NASCAR brand, why it was pretty much impossible for any competitor to start promoting NASCAR races, and much, much more. Because of these books, I was able to read and understand the annual reports of all the companies in the industry without any problems. I understood how they made money, why the margins were what they were, and many more things that were included in these annual reports. Let me give you another example. Let's say you are interested in Bridgepoint Education, that I am constantly using this as an example, which is a for-profit post-secondary education institution. It is a competitor to the University of Phoenix. If you don't know anything about the for-profit education industry, just go to Amazon and type in for-profit education to see what's available. Let's try it. For-profit education. Here we have Higher Ed Inc., the rise of the for-profit university. It definitely looks interesting. Let's see what is recommended under this book. Here we have for-profit colleges and universities, and here we have University Inc., corporate corruption. Definitely sparks my interest. So as you can see, there are plenty of sources that we can use to learn about the for-profit education industry. But you might be thinking, well, I can't be buying several books every time I want to study a company. Well, don't worry. Many times you don't have to buy them. You can just search for these books on Amazon and check if your local library has them and whether the library can borrow them from a different library. I live in Schaumburg, Illinois, and we have a great library. And anytime, and also if I can't find a book in a particular library, they have a way of searching other libraries in the area, and I can just go to another library and either read the book there or check it out using my Schaumburg Public Library card. If you can't find any books at a particular industry, you can obviously use the internet. And if you are investing in, let's say, a restaurant stock, well, just Google various topics such as starting a restaurant industry, and how to be a successful restaurateur. You can learn a lot like this by reading various articles. I also like to use YouTube to learn about various industries. For example, I was recently writing about Heckman Corporation, which is a water solutions business for the fracking industry. When I first started, I had absolutely no idea what they meant by water solutions, and I definitely did not know what fracking was. Within 4 hours of watching YouTube videos, I was an expert in fracking and why the company's services were so important to its clients. So let me just give you an example. What is fracking? And you are given with various different options on videos that you can watch, and after several hours of watching some of these videos, I knew exactly why the company's services were so important to its customers and what were the problems and issues with fracking. But most importantly, when I learned about fracking and the process, what it helped me was when I was reading the company's annual report, I knew exactly what they were talking about. Without watching YouTube videos, I would have been absolutely and completely lost and would have probably moved on to a different company simply because I couldn't understand anything that they were talking about in these reports. If you want to find a CEO's interviews on the internet, just Google it or punch it to YouTube to see if you can find any interviews with the CEO. Either search for company ABC CEO interview or company ABC name of the CEO interview. So for example, if we type in Noble Romance CEO interview, let's see what we can find. By doing this kind of search, I was able to find the CEO's interview. Click on small caps here and here. It takes you to an interview that was done on this website, and it was very, very educational. The CEO talked about how the company started, how it transitioned to what it is today, some of the problems that it had in the past, various lawsuits that the company was involved in, and where the company is today and how it is planning on growing in the future. Very, very useful tool to learn about the company and the CEO's plans for the future. And I like the interviews because you usually learn things that you would never learn from any other sources. If the CEO is the founder, he or she can tell you how the company got started, what kind of struggles it faced, and where is it going, and much, much more. It is also much easier to understand the business and the management after you read some of these interviews, assuming they're available. In addition to searching for CEO interviews, I also like to do a general search on the company into Google and see what kind of results I get. So let's say I type in Noble Romance, and obviously you get various different results, and I would usually look through the first 500 results, or I would go all the way from 1 to 50, and I don't read them all, but I do read the ones that catch my eye and help me understand information about the company. And you'd be surprised how many things you can learn about the company by performing this type of research. You can learn about current and past lawsuits, customer complaints. You sometimes you get access to analyst reports, which can save you a lot of time and help you understand the company more, and all kinds of other stuff that you can learn about the company that you wouldn't necessarily do if you didn't perform this kind of research. When you read the company's annual report or its 10K, you will usually find a section that talks about the company's history, but usually it's not very detailed, but it gives you a good overview most of the time. But another website that you can use to find more detailed histories is called fundinguniverse.com, and you have to go down to the bottom, click on company histories, and here you can search for any company you wish. So let's say Flow International Corporation, and the first link gives us a nice and long history of the company, when it was started and who started it, its origins. Very useful information when you're studying a company to have such a long history. Now that you have so much information available on the internet, people use it to share opinions on various publicly traded companies on various message boards such as Investors Hub and Yahoo message boards. So let me just show you what some of these look like. Investors Hub. And let's say we search for Flow International Corporation, and we go to message board. We can find various communications among various investors talking about what they like, what they don't like about the company. Another one that I want to show you is actually not Google, but go to Yahoo and go to Yahoo Finance, and let's say we want to go to the same company, so Flow, and on the left you can click on message boards, and it's very similar. You have various different people posting different comments, positive and negative, about the company, and you can click and read what it is that they have to say. And you should spend about an hour or so reading what other investors say about the company, and many times you will find completely useless comments, so ignore those, but look for the ones that you can learn from. Some of these people have been following the company for quite some time and might have something useful to say about it, such as a short analysis explaining why the company is cheap or why the management is incompetent. As with anything in life, when people are satisfied with something, they will probably not say anything, but when they are dissatisfied with something, then they will let you know about it. And this happens with stocks too. When some investors get aggravated for whatever reason, they might go to one of these message boards to voice their complaints. And this kind of feedback is extremely useful if you are thinking about investing in the company. Also, if you have a question, you can post your own comment, and maybe you will receive an intelligent response. You have nothing to lose. And one time I was researching for a company and I saw that the CEO was buying shares, and I didn't know why he was buying them. So to quickly find out whether the company was worth pursuing, I submitted a comment on one of these boards asking other investors if they could tell me in a few paragraphs why they like the company. And I received more than one response, and it saved me a lot of time. Imagine if you were interested in a particular company and you had a friend working there. You would probably ask this person about the company and what it is like to work there, right? Well, you can get almost the same type of feedback by going to glassdoor.com. On this website, you can find reviews done by employees who write about whether they like or dislike working for a particular company. And this is one of the best ways to find out about the culture within the company and how employees are being treated. If the company does not treat its employees with respect, you might want to think twice about investing in it, because the management may also mistreat you as a shareholder. So let me show you how you can search for what employees are saying. So go under companies and reviews. So let's say we type in again, Flow International Corporation, and let's click on reviews. And here we can find various different reviews, whether a 5-star, 2-star, 1-star, and they're usually structured in a way that the person talks about the pros, cons, and the advice to senior management. And it's just great source to learn about what people like or don't like about the company. And it's almost as good as if you had a friend working there and you could ask him or her questions about what it's like to work for the company and how the management is treating its employees. I have a separate video on how to navigate EDGAR, which is a website run by the Securities and Exchange Commission. Consequently, I will not be spending too much time here teaching you how to use the site. But if you want to access the company's SEC filings, EDGAR is where you want to go. In this example, we are already inside Flow International Corporation's SEC filings, and the first document that you want to read of any company is the 10K. And here it is in this example. In the previous step, you already read it once, but right now you have a lot more knowledge about the company and the industry, and it is much easier to read it again. This time you will get a lot more out of it if you read it again. The second time you read it, you want to have answers to the following questions. What products and services does the company provide? What countries does the company operate in? When was it founded? What kinds of clients does the company service? How does the company market its products? Who are the customers? Does the company make its products or does it outsource the production? What is its business strategy? Does the company have any competitive advantage, and if so, what is it? Does the company operate in a very competitive industry? Is the industry fragmented or does it have a few leaders? Where does the company get its raw materials for the production of its products? Does the company operate with one or more business segments? Is the product or service very important to its customers? Can they live without it? How many employees does the company have? Does any customer represent a significant portion of the company's revenues? Is the company involved in any lawsuits? And if so, how much can it be liable for? How does the company grow? Does it grow internally or does it grow through acquisitions? Which stock exchange is the company listed on? Is the company profitable? Is it growing revenues and net profits every year? Does the company have any debt? Is any of this debt coming due? And if so, does the company have enough money to pay it back? After you read the most recent 10K and answer these questions, pull up the 10Ks from the last 10 years and read them all. And the easiest way to do it is to, in the filing type in 10K, and here you have only 10K documents listed. So it's much easier to read the last 10 years of 10Ks without having the distraction of other documents on the screen. And the reason why you want to read 10Ks from the past 10 years, if they're available, is so that you can see the company's progression from one year to another. Pay attention to certain things such as projections from previous years. Check to see if they ever came to fruition, and if they didn't, then why? Did the company miss projections because of the recession, or is the management known for overpromising and under-delivering? Go to the financial section of the 10K for the last 10 years and enter the income statement and balance sheet into the Excel, and here's what I mean. So let's say we go to 10K for this year, financial statements, and here we have the income statement for the last 3 years. So I will take this and hand by hand, line by line, I will enter them into Excel, and this is what it's going to look like. And let me go back again, but notice that in this example I only have 3 years, but in this Excel I have all the way to 2005. Well, that's why you wanna use more than one 10K to get the other numbers. So if we go to this one here, I can get the same information for 2008, 2009, and 2010. Then once I have this information entered, I analyze it and value the company. Because analyzing and valuing a company is a separate topic, I will not be spending any time here doing so because I covered it in more detail in my other videos. So let's move on. If we go back to all of the SEC filings of Flow International Corporation, you can see that since the most recent 10K that was filed on June 28, 2012, there were some other documents filed since then. And the one at the top is 10Q, which is a quarterly report. And because it's the most recent report, you definitely need to read it. And I don't usually read all of the 10Qs that were previously filed. I only really read the ones that were filed after the most recent 10Q. And the reason why you want to read it is because you want to see if the company is still operating in the same fashion that it was when you were reading the 10K. If the company is undergoing turnaround, then read the 10Q to see how the turnaround is progressing. Also, after I entered the financial statements from the last 10 years into Excel, I would also enter the quarterly reports here, the quarterly reports that are obviously available. Another form that you definitely want to read is Def 14, which is Definitive Praxis Statement. This is a document that you should read because it tells you who the managers and directors are, how much money they make, what committees they serve on, and how much stock they own in the particular company. In my other video, Navigating Edgar, I spent more time talking about how to read various SEC forms and what they look like, so I'm just going to move on for now. Besides reading various 10Ks and 10Qs, sometimes companies allow you to listen to past conference calls or the most current conference call. And usually you will find links to conference calls in the investor relations sections of the company's website. In the case of Energo Drilling that we previously looked at, we find conference calls under media, and we can go to conference calls. And as you can see, they have links to many conference calls from the past, and I love how they allow you to listen to conference calls previously recorded. And as you can see, they date back all the way to May 31st, 2010. And when I was studying this company, I listened to every single one of them to gain the most understanding that I could about the company. And what you want to look for when you listen to these conference calls is you want to get the feeling for the management and how they communicate with analysts and shareholders. Do they sound promotional, which is a red flag, or do they sound intelligent and conservative, which is much more preferable? You have to use your judgment here. And at the end of a conference call, there is a question and answer session with investors and analysts, and here you can learn about various concerns that shareholders or analysts have about the company's future. Unfortunately, sometimes companies do not have any recordings available for you to listen. So one other way that you can try to see if you can get access to any conference calls in a text format is to go to Seeking Alpha, which is the website that we previously used to see if someone else wrote about a particular company, and also go to under Investing Ideas and type in the company's ticker symbol. So let's see if we can type in again Flow International Corporation. And if you scroll down, you can see on the left there is a link to transcripts. So click on it, and here you can find various transcripts from past conference calls, and instead of listening to them, you can read what was said on the conference call and what kind of questions were asked during the question and answer session. Unfortunately, with Flow International Corporation, there are only 2 transcripts available, and they are pretty old, from 2008. But this is the best. If this is the best that you have, then this is the best. There's nothing you can do about it. Previously, I told you that you should read various books to learn about the company's industry. Well, you should also search to see if anyone has written a book on your subject company. The type of companies that you choose to invest in will determine whether there are books written about them. For example, if you want to invest in large big cap companies such as Coca-Cola, McDonald's, and ExxonMobil, then you will probably find plenty of books on these companies. However, if you choose to invest in smaller companies, you probably will not have such luck, but this doesn't mean that you shouldn't try. For example, the company that we previously looked at, Arcticat, manufactures snowmobiles and ATVs. It is a very small company in relation to Coca-Cola or McDonald's, but when you search Amazon, you will actually find a book written about it. Let me show you. If you scroll down, you can see the title of this book is Legend, Arcticat's First 4 Decades. And before I invested in Arcticat, which by the way turned out to be a very, very nice investment for me, I found this book very instrumental. I learned about the company's history, its fight for survival, and many other things that allowed me to understand it better and be comfortable in investing in it. And it's kind of funny, I'm looking at it now. It says that the price of the book is $500, and there's no way that I would have ever paid $500 for a book. So believe me, I did not pay $500 to read this book, but I did have to buy it because it was not available in any of the libraries around my house. So if there's a book written on Arcticat, you should definitely always see if there's a book written on any of the company that you are researching. Before you buy a video camera, you are likely going to read various reviews about the product before you spend a lot of money on it. You should do the same before buying a stock. Get reviews or references from people that are involved with the company, such as employees, other investors, and customers. To get feedback from employees, whether they're current or former employees, you can do it through Glassdoor.com, which we previously discussed, but sometimes you might not find any reviews. In this case, try to see if you can locate former or current employees and call them up and ask them a few questions. Let me show you how I use LinkedIn to do it. When you are on the main page for LinkedIn, go to Advanced, and under the company, type in the name of the company. So let's say Arcticat, and you can choose current or past employees, but in this case let's leave current or past and click search, and the website generates a link, a list of people that were involved with the company. And as you can see, sometimes it gives you the name of the person, such as the first one, see Scott, but most of the time all of these accounts are private and you cannot see the name of the person. But you can still figure out who they are. So let's say we click on the second one, and as you can see, this is a private account and we don't know who this person is, and unless we connect with them, there's no way of knowing who they are. But there is a way. If you go to Google, take the person's title, copy and paste it into Google, then take, let's say, this person's education, copy and paste it right behind, and then search. And usually within the first few findings, you will actually find the person's full LinkedIn account. And in this case, Kim Jenkins. So let's see if it's the same. Let's compare it to the previous one, a trade compliance manager at Arcticat. Trade compliance manager at Arcticat, same thing. Education, University of Minnesota Twin Cities, same thing. University of Minnesota Twin Cities. 73 connections, 73 connections. This is the correct person. So now that I have the name, what I would do is I would either try to locate this person's phone number at home and call them there, or look at their resume and find out where they currently work and call them at their new employer. And once I get the person on the phone, I usually ask them the following questions. What is it like, or what was it like to work for the company? Does the management treat its employees with respect? Do you like or dislike working there, and why? How does the company promote people? Does it promote from within, which is preferable, or does it hire people from outside? Are employees properly compensated? How is the employee turnover? Would you recommend this company to any of your friends? To get feedback from other investors, you can visit various message boards. But the serious hedge fund investors are unlikely to hang out at message boards. You already know who they are because you previously looked through various 13Ds and 13Gs, so you can just call them up and ask them the following questions. What has been your experience with owning the company? Is the management open to talking with you? Why did you invest in the company in the first place? What do you like and dislike about the company? What do you think the stock should trade for within the next 3 years from now? Is this a big position in relation to your entire portfolio? And after you have a conversation like this, you'd be surprised how much more you learn about a company, even though you already spend hours and hours studying it. But by talking to other investors, especially large investors, you learn a lot more than you can actually learn on your own. But here's another interesting thing. Currently on your screen you have SEC filings of Arcticat. And one other thing that I like to do is I like to make a list of former large investors that were involved with the company, but they do not own the company anymore, or they do not own enough shares to be shown as large shareholders. So to do that, I want to go to filing type and pull up Dev 14. And all I want is proxy statements from the previous years. And let's say if we pull up the first one and we go inside, I want to scroll down until I find large shareholders. And here we have BlackRock that owns 7.3% of the company. The Vanguard Group owns 5% of the company, and Dimensional Fund Advisors owns 7% of the company. But this is the most recent proxy. If I open up one from 2 years before, Okay, 2 years ago, completely different set of investors owned this stock. As you can see, Suzuki Motor Corporation owned 33.6% of the company. Royce and Associates owned 6.4% of the company. And now, almost none of these guys own the stock anymore. So what I would do, I would, locate the previous large owners and, contact them and ask them, why aren't you a shareholder of the company anymore? What was your experience owning it? Why did you sell? Did you sell because, the stock appreciated and you take profits? Or did you sell because you were disappointed with the company's performance? These kind of conversations can turn out to be much more beneficial than talking to the current large shareholders, because obviously they're biased. They own the stock and they want to talk their own book. But these guys sold and they have no emotional attachment to the stock anymore. While it is nice to get feedback from employees and other investors, probably the most important feedback is from the customers, because they are the ones paying the bills. Depending on the product or service, customers will differ, and sometimes it is easier to get customers' feedback. For example, if we are talking about NASCAR racing events, where you can simply go to a race or read about them on the internet and learn what people think about NASCAR. But if we are talking about the company that manufactures products for dentists, then call up a few dentists and ask them why they are using this company and why they are not using its competitor. Ask if the company provides them with good customer service. And one way, you can get access to various customers is through the company's website. And if you remember, when we visited Energold Drilling, under Investor Relations tab, we had a corporate presentation. And within the corporate presentation, there was a list of customers that work with this company. So what I would do, I would call up a few of these guys and ask them why they work with this company. And some of the questions that I would ask them is, why are you using the product or service? Are you satisfied with the company's products and services? Why are you buying from this company and not from its competitor? Is the product or service critically important to you or your business? What would happen if you did not have access to this product or service? If you wanted to switch to a competitor, would it be easy or would it be costly for you to do so? Is the product or service expensive in your opinion? Does the price of the product or service represent a big portion of your expenses? And again, after having these types of conversations, you learn it from the customers, why they are using the product, and it gives you a better picture of why the company is successful or not. By now you should know a lot about the company and whether the stock is cheap enough for you to buy it. But before you do so, call the company and ask if you can talk to the CEO. If it is a big company, then you most likely will have absolutely no shot at getting the CEO on the phone. Then ask to see if you can talk to the investment relations representative. But if you are dealing with a small company, you most likely will get the CEO on the phone. Tell the person that you are interested in buying stock in the company and that you have studied it for the last several days, but you would like to ask a few more questions. Most CEOs love talking about themselves and their businesses, so once you get them going, you might be on the phone for an hour. And to get their phone number, usually when you are on investor relations part of the website, look for some kind of way to contact them. In the case of Energold, contact info, and you have various different people listed here with their phone numbers. But one thing that I want to point out here is that the first person listed here is Fred Davidson. This is the company's CEO, and on the bottom you have Jerry. Not on the bottom, but one person after him is Jerry Huang, who is the manager of investor relations. And what is amazing about Energold is that Fred Davidson will talk to anyone. It doesn't matter if you own 1 share, 2 shares, 100, or 1,000,000 shares, he will talk to you. And when I was researching this company, I probably talked to him 3 or 4 times, and he was always accessible, assuming he wasn't traveling, of course. But it was just amazing that I was able to get him on the phone and, had him answer any questions that I had. And before giving you some questions to ask once you have the CEOs on the phone, I would like to point out why you want to interview the CEO at the end of your due diligence. One reason is that by now you know a lot about the company and you can actually have an intelligent conversation. You probably know what to ask when the CEO responds to something, and you might be able to come up with another question on the spot. Another reason why you want to talk to the CEO at the end is the fact that many of them are excellent salespeople. And if you spoke with them at the beginning, they might sell you on the company and you could end up buying the stock without completing the full due diligence process. So now, let me give you some questions. When I get the CEO on the phone, I usually like to start the conversation with something like this. How did you get into this business? Was it something that you always wanted to do, or did you just happen to get into it by accident? How are you different from your competitors? Why do customers buy from you versus your competitors? Do you have any competitive advantage? What kind of challenges, if any, did you experience over the last 5 years? What kind of challenges, if any, is the company experiencing right now? Where do you see your company in 5 to 10 years from now? What are your plans for growing the company? Are you looking at any acquisitions? When you make acquisitions, what do you look for in the target companies? What prices are you willing to pay for them? What is your philosophy on capital allocation? These are some basic questions that you might ask, but conversations never go according to the plan. The best thing is to just let the conversation happen and slip your questions into the conversation. You will already have answers to many of these questions, but you want to hear it again from the CEO to see if he or she is consistent with what you already learned before. Also, you might have other questions that I did not list here, so don't be shy, just ask. Many investors are shy about talking to former employees, customers, or managers of the company, and this is obviously understandable. But these conversations are extremely helpful in understanding the company and the people that are affected by it. Not all of them will talk to you. You will get rejected, but this doesn't matter. If you try to talk to enough people, some of them will talk to you, and others, of course, will hang up on you. And there's nothing you can do about it. But this should not stop you from trying.
In this video, I gave you a roadmap of what you need to do in terms of research before you buy the stock of a particular company. First, you perform a quick due diligence where you check out some basic facts just to see if you are even remotely interested in pursuing the company. Then you spend a little bit more time on medium due diligence where you familiarize yourself with the investment opportunity, and finally, when the first 2 steps turn out to be positive, then you engage yourself in full due diligence, which, as I mentioned before, is much more intense and time-consuming. And during your due diligence process, you study the company in detail and the industry that the company operates in. So with that being said, thank you very much for watching, and I hope you enjoyed it.